Hello, I'm Marcus Brix with the CattleFax Closing Bell, brought to you by CattleFax, the deciding factor. The cattle feeding segment of our industry is known as being a margin operator. The cattle feeder must face price risk while buying inputs such as feeder cattle and feedstuffs, in addition to covering other associated costs. Once the animal is fed and ready for slaughter, the cattle feeder faces price risk on the output side and is often at the mercy of the market. In order to generate a profit, the revenue generated per head sold must be greater than the cost per head sold. At the time a cattle feeder looks to place an animal on feed, they should formulate an expectation for break-even price. Occasionally, the cattle feeder will need to buy cattle that will never break even. Today is one of those times. Break-evens projected over the next 6 months average out to about $116 per hundredweight, while the futures market through December is anticipating prices between $110 and $114 today. Econ 101 teaches us that as long as an unprofitable margin operator is making enough to cover their variable costs, they will continue to operate to cover some of the fixed costs. Fixed costs exist regardless if the operation is feeding cattle, so the cattle feeder will hope to make a margin on feed costs and spread the fixed costs over more head. This is a partial explanation for why cattle feeders are still placing large volumes of cattle, despite months of negative margins. From April, May, June, CattleFax estimates the monthly per head profit loss at negative $53 per head, negative $104 per head, and negative $150 per head respectively, worsening some each month. As cattle feeders are losing money out of the feed yard, significant market factors like a weakening basis and a premium structure in the futures market suggest that negative margins could persist into the later part of the year. With cost of gains still cheaper than out-front futures, the cattle feeder might be encouraged to increase days on feed, which could lead to larger cattle weights and a large monthly supply carryover. Steer carcass weights were up 1 pound over last week a year ago, but remain below weights in 2016, following CattleFax projections. Should weights begin to reach levels seen in 2015 and 2016, this is a warning signal that the cattle feeder is building a large front-end supply, and the cattle feeder will experience a deeper equity drain. Thanks for watching. Remember to visit CattleFax.com to become a member, receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the volatility is extreme, the risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.